Hello, everyone. My name is Andreas Salasinos, and I would like to welcome you all to today's webinar titled The Ultimate Trading Formula. Let's go through the agenda for today. We will be discussing, of course, the ingredients of the formula, the parameters of this formula, the definition of a trend, the direction, how to write the trend, and there are occasions where we have, as traders, admit our mistakes. And I have to point that out because it's very important for our psychology. And then, of course, I'll show you how to take your profit and whether to identify the beginning of a trend or the end of a trend. Of course, throughout the presentation, you're free to post your questions and I will try to answer them as soon as possible. Let's get started. What do you need to trade the financial markets? Of course, you need a trading system, a solid trading system with specific entry point, specific take profit level, and specific stop loss, and specific exit levels. This is what you need to trade the financial market. On top of that, you need money management rules, risk management rules, which are imperative to trade the markets. And after you have these two in place, what you have to do is to follow them, right? So to follow them, you need psychology, mindset, discipline. This is what you need to have in place in order to follow the trading system that I'm going to present to you today and the risk management rules that you need to follow. So if all three parameters are in place, then you have what I call the ultimate trading formula. Okay? So just please type okay, yes, give me some feedback. If you can see me, see my presentation slides, and you can hear me, just type yes or okay, something like that. All right? Yes. Okay, excellent. So your trading system may be based on sentiment, on feeling, gut feeling, yes. Those of you who attended my on-location seminars, you remember the story with my friend, right? When he was trying to explain to me his system based on gut feeling, that he explained to me how to feel the market, right? So one way to base your system is this. Another way, of course, is the fundamental analysis, right? And the third way is, of course, the technical analysis approach. And we are going to concentrate basically on that approach. Fundamental analysis, of course, is another way, and many traders follow that approach. The problem with fundamental analysis is that you need to have some economic background, allow me to say, and you need to be able to identify reversals in the markets. Fundamental analysis does not do that. It's a major disadvantage of fundamental analysis approach. The approach per se does not have the means to identify on time early the turning points in the market. But it can guide you when the trend, the long-term trend, is in place. But most of us are intraday traders, right, in foreign exchange. So I would say that fundamental analysis, especially if you don't have an economics background, is not going to be of any good help. This is my subjective opinion, of course. And let's skip fundamental analysis and concentrate on technical approach. So technical analysis is based on three principles. The first principle is that market action, or if you prefer, price, right? Price discounts everything. What does it mean, price discounts everything? It simply means that everything out there in the world, in the universe, is shown on your price chart. And the only thing that you need to know is how to read, how to understand, how to interpret, how to analyze your price chart. This is the only thing that you need. Okay? So either that information is fundamental, economics, financial, political, environmental, geographical, anything is shown on your price chart. So this is the first principle. And the second principle is that prices move in trends. So prices do not move in a straight line. They rather follow a zigzag path, right? And that is very essential in technical analysis. That helps us as traders, as technical traders, to pinpoint, to identify, to spot the turning points in the market. Yes, and of course I will show you how to do that. And the third important principle is that history repeats itself. What does it mean? It simply means that certain price patterns, formations that worked very well in the past are expected to work equally well today and into the future. Nothing complicated, very easy principles to understand. If you have any questions, please type them and I will be happy to answer them if I can. So our goal as technical analysts is to identify the trend early in its development, very early. Why? Because if we identify the trend very early in its development, then we can ride the trend. We get in the trend very fast and we exploit that trend. Okay? Very good. Now, of course, the question that follows is, what is a trend? This is the question, and of course, we're going to answer it in every detail. It's the direction of the market. It's the direction of successive tops and bottoms. This is a more detailed definition. Of course, as a parenthesis, markets do not move in a straight line. I mentioned that. Markets follow a zigzag path. This is a principle of technical analysis. And of course, markets, as I mentioned a couple of times, move in a zigzag path. Okay? So this is the trend, but I'm sure that these definitions are not enough for you to understand and be able to identify a trend on the price chart. So let me show you a picture, right? A picture is worth 1,000 words, right? This is what they say. So here we are. Now, you see that we have tops and bottoms. So a trend is actually similar to that, to what you see here. And I can show you another trend. In this case, of course, it's a downtrend, right? Very good. And now, of course, this is a trendless market. It's a sideways market. It's a range. This is what it is. There is no direction up or down. It's going sideways. And of course, this is a risky area on the price chart to trade. I know that some of you love to trade the range, right? So those of you who attended my seminars and workshops, you know my opinion. And for me, it's a very good opportunity to take a break when I identify a range on my price chart. Directions of trend, there are only three directions: up, down, and sideways. There is no other direction. In one of my seminars and workshops recently, somebody during the practical assignment that I gave to the class, somebody said that it's almost up and almost down. Unfortunately, there is no such a thing. There are only three directions: clearly up, clearly down, and sideways. Okay, guys? And what is an uptrend now? Okay, an uptrend based on Charles Dow theory. Charles Dow is considered the father of technical analysis. He formulated his theory in the late 1800s, all right? And he said that when you identify two tops, one top higher than the previous one, and two bottoms higher than the previous one, right? Then prices go above the last top, like here. Do you see this candlestick that goes above the last top? Then at this point here, we are at an uptrend, an official uptrend. Okay? This is what Charles Dow himself said. So an uptrend based on Charles Dow's teachings is when you have two tops and two bottoms higher than each other and prices going above the second or last top, like in this case here. Okay? And a downtrend is when you have two tops and two bottoms lower than each other, and then prices go below the second, or if you want to call it last bottom, like this case right here. So from this point and downward, we are officially in a downtrend. All right? Very good. And of course, the range, the sideways market, where you see equal tops and equal bottoms, right? Of course, if you take a closer look on my slide, you will realize that my painting or design skills is not one of my strongest abilities, right? But to be honest, it's on purpose that I designed it like that. Like this candlestick here touches the upper horizontal line, where in this case, this one does not. And if you go at the lower band, you see that the bottoms are not really equal. And this is the problem with the sideways market, all right? The problem is that on a picture, they might look as if they are equal, but in reality, they are never equal. And that creates a big problem when trading the financial markets. Let me see if I have a question. If I can find my arrow here. Yes, here's my arrow. Where's the question? Okay, sorry guys. Let me see if I can put this one here. Okay, very good. Which time frame you advise to use? Osama Faris. Osama Faris. Mr. Osama. The technical analysis theories apply to all time frames and all financial instruments. If you are asking me for specific time frames, I would be happy to tell you that I like the 30 minutes and the 4 hours, but that has to do with me. For you, perhaps the time frame might be 1 hour or something else, okay? So it's actually up to you. All right? Me too. All right, very good. Okay, let's go. Another question. I find it very easy to trade the trends and ranges with Renko charts. Will you recommend it? First of all, what is a Renko chart? Does it have to do with volume, maybe? Can you give me an answer, please? Let's clarify the Renko chart. Renko chart, please. Mr. Mohammed, can you please clarify the Renko chart? What is the definition of the Renko chart? We have to define the Renko chart and why Renko and not candlesticks, right? So, if we trade breakout, some breakouts are fake. Okay. Fake outs, breakouts and fake, yes. Look at that. Any strategy in trading the financial markets, any strategy on any concept or theory, meaning gut feeling or fundamental analysis, it's not 100% correct. There's no such a thing as having a bulletproof 100% trading strategy. And what I'm teaching you here is not an exception. It's a very good strategy, but sometimes we fail. But of course, those of you who attended my seminars and workshops, you know that I give you confirmation tools to increase the probability of success of your entries, right? And of course, in another occasion, in another webinar, I will do just that, so I can explain how you can confirm your entries and you have less fake entries. Okay? Now, another question is why you prefer 30 minutes. I find it fairly fast. It's not too fast, like 1 minute or 5 minutes, right? It's fairly fast. It gives you a nice amount of profit in pips, right? It can give you like 10, 15, 20 pips profit on the 30 minutes on an average. And if you have enough time, then 30 minutes, I find it a very good time frame. 1 hour is fine as well, but just remember that it depends on your trading profile, on your job, on how much free time you have. If you need 6 to 10 candlesticks to form a swing, then if you're using the 1 hour time frame, you need minimum 6 hours, right? So it has to do with your lifestyle, with your job and everything. So another one is I use the ADX to find the volatility and I trade based on it. If you make profit, Mr. Mohammed Fazul, continue to do it. If you don't make profit, perhaps you will consider what I'm teaching here. All right? Very good. How we can know the end of the trend? This is what we are going to talk about today. If I need to buy or sell, it's necessary to do so after the price break the top or bottom price? My opinion is yes, yes, yes. After the price confirms that we have a clear direction. We have a breakout, if you want to call it a breakout, or a reversal. Okay? And another question, guys, slow down, let me see. Please try to explain how to lock profit before the end of the webinar. Thanks. Mr. Prince Jeremiah, where are you from? I think I presented that many times on my own location and seminars and workshops. Actually, Mr. Prince, it's out of the scope of this webinar. If a higher time frame in an uptrend and lower time frame in a downtrend, which one to follow? You will follow your own time frame, the time frame that you are going to take the trade. For example, if you are following the 30-minute time frame, then you stick to the 30-minute time frames. Don't mix the time frames. I know that there is a theory, a concept, a strategy based on multiple time frames. as I explained many times, especially after training you guys on Elliott wave theory on location, you realize that you don't need actually to have different time frames. One time frame is more than enough. Okay? So what is next? I am attending this webinar to find out a perfect strategy to trade with stop loss. I hope you could help me out, Mr. Mohammed Fazul. Yes, I'm sure I will help you. All right. Anything else? Okay. I think I answered most of the questions, all of them actually. So we can continue. So buy or sell. When are you going to buy and when are you going to sell? When you identify an uptrend, then you are allowed to buy. Because when you have an uptrend, prices are most likely to go up. And when you have a downtrend, prices are most likely going down. That's why in a downtrend, you are allowed to sell. All right? Very good. So this is what I'm saying here. You only buy in an uptrend, you only sell in a downtrend. And of course, if you identify a range, then you stay out of the market, right? You don't have to trade during the range. Why? Because in a range, there are no clear-cut rules. The probabilities are low that this range will continue to move sideways. By the time you identify a range, the range most probably has come to an end. And this is the problem with sideways markets. Okay? All right. So we are moving into our strategy. We know what the trend is, what an uptrend is, and what the downtrend. And of course, Charles Dow said that here at this point, when candlesticks go above the second top, you have an official uptrend. And since we have an uptrend, we are allowed to buy, right? Based on the previous slide. Okay? Very good. But our strategy that I'm explaining here does not suggest to buy here. Okay, guys, let me clarify that. This is what Charles Dow suggested before 1900. Okay, markets are much faster nowadays. Okay, all right. So what I'm trying to say here is that after we identify an uptrend, then we are allowed to buy. I will come back to the entry for the uptrend, for the buy in a while. So in a downtrend, after we have officially a downtrend, like in this case, then we are allowed to sell based on Charles Dow's theory. All right? Very good. And of course, in a sideways market, we stay out. We take a break. We need some break, right? From focusing on the price charts for many hours. So look at that. Here we see lower tops. Do you see the lower tops and lower bottoms? And this is, of course, a beautiful definition of a downtrend. And please take a closer look that each top is lower than the previous top and each bottom is lower than the previous bottom. So we identify lower tops and lower bottoms, right? Very good. Now, here we have this last bottom that does not follow our rules. It's not lower than the previous bottom, right? Do you see that? This bottom is not lower than the previous bottom. Okay? So what does it mean? Does it mean that we are going to buy? No, we're not going to buy. It's just a warning. It's just an alert. The price chart is telling us to be focused on the chart because most probably something is going on. It might be fundamental, it might be geographical, it might be political, it might be environmental, it might be anything. We don't really care what it is, right? We only care if there is an opportunity to enter the market, right? Very good. And what do you see now? You see that prices go above the last top. Now, this is our strategy. For us, this is a reversal. This is a reversal of the downtrend. And here, at this specific candlestick, when it goes above the last top, then it's a very good opportunity to buy. And this is our entry position. It's a long entry. It's our entry to buy. Okay? All right, guys? So this is the entry point to go long. So I have a couple of comments here. Let me see. Nice. Yeah, very fast. Let me find my pointer here. All right, let me see. Many questions. Okay. Maybe this is not the question for this course, but what do you recommend? Which time zones to trade in? Should we do it in Europe or US market timings? I find it difficult to identify an entry. And if there are a trend in the market always. Okay. All right. So which time zone is the best? We have the European, we have the American, we have the Tokyo, and we have the Australian, right? So I believe that the European and the American session are the most volatile, if you like, where the Tokyo is a little bit more quiet. Not all the time, but compared to the European and the US session, I believe the Tokyo session, the Asian session is a little bit quiet. So I would say European and US. Of course, if you live in Asia, then it's going to be very difficult for you to follow the other sessions. So you have to stick to your local section. Now, you can experiment with different financial instruments, different currency pairs, different time frames. So if there is not a very good move in one time frame, if you switch a time frame, then you can find a nice opportunity. Okay? So I hope that helps Mr. Ali Raza. And may I ask that normally use the MACD, stochastic, and RSI. However, is it a bad thing that I analyze the day 1 and H4, but execute trades on H1? Yes, as I explained, I like to stick to one time frame. I analyze one time frame and I place my trade on one time frame. Now, if that time frame doesn't show any opportunity, then I can switch to another time frame and stick to that time frame, the new one, a lower perhaps time frame or higher, it doesn't really matter. Analyze that time frame, and if I have a nice opportunity, then I will place my order on that specific time frame. I don't like to mix. For example, if the higher time frame goes up, the middle goes down, and the lowest time frame goes up. I don't like these multiple time frame strategies, okay? Because there's no use. As I explain on location seminars and workshops, it's not needed. Okay. Most times using our failure swing strategy, after price is triggered, the price will retract and stay in a range for a long time. This is very frequent on the 4-hour time frame. What is your advice? For instance, in my Euro USD has been in the killing field since last week. Oh, Mr. Emmanuel, you followed exactly my words, right? Killing field, very good. I call range a killing field, guys. Yes. Yeah. So let's switch to the 4-hour time frame. Let me find it here. I know I have very big difficulty finding my arrow, guys. I don't know. Yeah. 4 hours. All right. Euro USD. So where is the entry? The entry is supposed to be at this point here, right? Let me just remove it and place a shorter line. So here, when prices moved below this bottom, do you see that we have higher tops and higher bottoms, right? And then here we have our reversal. It's a sell opportunity, so you sell it here. Now, you sell here, Mr. Emmanuel, is that correct? Give me some feedback. Is this the entry that you are talking about, Mr. Emmanuel? Mr. Emmanuel, give me some feedback. Is that yes? All right. So if this is your sell entry, then of course you are out of this trade, because at this point here, you were supposed to place your stop loss, and your stop loss was hit at this point. Yes, it's going sideways, but you are already out. Okay? So yes, sometimes that will happen, but of course, we can go a little bit to the left and see if we have another opportunity. If this is a downtrend, guys, look at that. If this is a downtrend, do you see lower tops and lower bottoms? And here you have this bottom here that failed to go lower than the previous one. This bottom, it's a warning. And then prices go above the last top. So here you have a beautiful buy opportunity. Now here you place your stop loss, and the market goes up and up and up, and you make a lot of profit, Mr. Emmanuel. All right? Sometimes after the entry is triggered, the market will retract, and it might give you some trouble. But other times, it will go straight through the top, like in this case, and it will never come back, like what you see here on your price chart. All right? So let me see if I have more questions. Could we use zigzag or fractal to mark high low and trade the string failure? Not really, not really, not really. I want you to be able, with practice, to identify the tops and the bottoms visually. Okay? I don't want you to rely on any tool to identify tops and bottoms. This is my opinion. Another question is, according to you, this trend pattern is better for stocks or currencies or something else? Okay. According to technical analysis, Mr. Alexei Ivanov, this trend pattern is good for stocks, currency pairs, indices, CFDs, and any other financial instrument. Okay? I hope that helps. And please, can you use a live chart to identify an entry point? It can be difficult for some of us. Okay, so Live, you mean go where? On what time frame? Let me see if I can find one, because we have to find a setup that's being formed right now. Otherwise, how can I show you on a live chart? So let me see if the 1 minute can help us. So let me switch another instrument perhaps. Let me see if I can find one. No, what about here? Not yet. So that's why it's very difficult to do it on a, oh, here you are. So you bought here, look at it, Australian dollar, Japanese yen, you bought right here, right? And you have a stop loss. I haven't discussed stop loss, but your stop loss is right here. So I will leave it here, okay, guys? And I will come back in a while and watch what is going on. So you have a beautiful downtrend, and then this bottom doesn't go lower than the last one, right? And prices go above the last top. So at this point here, right here, you buy. Okay, this is our strategy, guys. Very good. So Mr. Prince Jeremiah, I hope this helps, right? Just give me yes or no if it helps you. All right. Yes, very good. Thank you. And then I have another question. How one get the take profit? All right, Mr. Ernest. Okay, I will show you that in a few minutes. All right. For the time being, let me enjoy my profits, guys. You see, prices are going higher. Very good. All right. So here we are. It's the same setup. This is what I'm teaching you here, and this is what is happening. If you take a look here on the 1 minute Australian Japanese yen. All right. It's the same thing. Now, you buy here, right? And of course, this is the pattern, the reversal pattern that worked very well in the past, and we expect it to work very well today and tomorrow. Okay? This is what history repeats itself. Now, this is a beautiful uptrend, and then you have higher tops and higher bottoms, and this is the definition of an uptrend. And then you identify this top right here that doesn't go higher than the previous top. Not only doesn't go higher, prices go below the last bottom, right? And at this point here, then we have a reversal and we can sell, all right? We can sell. So here we are allowed to sell because it's the beginning of a downtrend, of a new trend. So at this point here, right here, when prices go below this bottom, the uptrend has finished, right? And you have a new trend. This time it's a downtrend. So it's the beginning of a downtrend. And we are allowed, it's a very good opportunity to sell, to enter the market short. And of course, again, we call this a failure swing. So uptrend, reversal, failure swing, we sell. And of course, here you have a downtrend, this bottom that fails to go lower, prices go above the top, you have your failure swing, and you enter the market with a long position, with a buy position. Okay, the only thing that you have to remember is that you are not allowed to identify, to attempt to identify a failure swing in a range. You are not allowed to do that, guys, okay? You have to find a trend in order to identify a reversal. Our reversal, of course, is called failure swing. Is that clear? Please type yes, no, so I can get some feedback, please. You are not allowed to identify a reversal in a range. A reversal means I reverse a trend, not a range. Okay? Very good. Thank you, guys. So another question here is, do markets change from uptrend to downtrend immediately? Yes and no. Right? Sometimes you have an uptrend, then prices go sideways, and then might go down. And sometimes you have a downtrend, and then prices go sideways, and then they go up. So some other times, of course, they reverse immediately. And this is what we want to take advantage, this immediate reversal. Okay? That's why, of course, we will place our protective stop loss. Okay? With the, yes, I'm not there. Very good. So this is what I just said here. The prerequisites for failure swing is actually the existence of a trend in the opposite direction. Okay. Now, stop loss is imperative, is very important, it's essential in this strategy, actually in any strategy. Okay. So another question. If the markets have been ranging, can you use the above strategy to determine when a trend is about to start? No. No. We determine that a trend is about to start with identifying a failure swing, which is a reversal of a trend. If you have a range, then there is no trend in place, so we cannot use this strategy. And actually, I suggest that we stay out of the market because you have a range. Okay? Do you recommend entry only when there is a reversal swing? Are there any other times to enter? No, we enter based on this strategy only when you identify a failure swing. There are many other strategies, riskier maybe I would say, that enter in a different way. But I prefer to stick to this strategy for now, which is less risky compared to other strategies. Okay. What else? What is that? When there is a reversal swing, are there any other times to enter? Are these entry rules only for the beginning of the trend, or can we use them during the trend as well? Look, when you have a trend established, then you don't have failure swings, you have swings. You can take entries there, but the problem is that since you are already in a trend, you don't really know how far that trend will continue to move. So what I say is that if you enter at the beginning of the trend, then if you start taking profit early, you will be in better shape than the other person, the other trader who will delay the entry and then might not make it to lock any profit. It's going to become more obvious as we go on. Another question. In a previous webinar, you mentioned momentum indicator should be considered in a failure swing. Can you please explain more? Mr. Nasser, yes, you can use momentum, MACD, and linearly weighted moving average to confirm your entry, but unfortunately, it's out of the scope of today's webinar. Okay, very good. So stop loss is another essential parameter of our system. It's the place on the price chart where we will close our position. It's the place on our price chart that we are going to say, look, I made a mistake. The market didn't go in the direction that I expected, and now I lose some money, so it's better to take that small loss and get out. This is what stop loss is. You lose a small amount of money to protect your capital. For beginners, it's a little bit difficult to accept the loss. But if you don't accept a small loss, then that small loss will become bigger and bigger, and perhaps you will lose much more money. Okay? So I use a stop loss, a protective stop loss, as I call it. Very good. So it ensures that you're going to lose a minimum amount of money and you protect your capital. So let me show you how to place your stop loss. So you see that you have a beautiful downtrend, and now you have this failure swing where this bottom doesn't go lower and prices go above the last top. So here you have a failure swing, the downtrend has finished, and you have a new uptrend, and you are allowed to buy here. And of course, at the same time, you have to place your stop loss, your protective stop loss to protect your capital, right? Because sometimes prices are expected to go up, but sometimes they will not go up and they will go in the opposite direction, right? And that sometimes will happen. So to avoid losing a big amount of money, I use a stop loss, and I know in advance how much I am going to risk. And it's very important because we're discussing the risk management at this point in time. All right, what would you say is the minimum stop loss per time frame? There is no minimum stop loss in pips. Okay, we're not talking about 5, 10, or 50 pips, because I know a lot of traders, a lot of you use 50 pips. No, we don't use that. We use a technical stop loss. What is a technical stop loss? It means that I have an entry here, and here is my bottom. So my stop loss is going to be here at this bottom, because if prices come down below this bottom, then I don't have any uptrend anymore, right? So there's no reason, there's no excuse to be in that uptrend anymore, because there's no uptrend. Okay, guys? All right, very good. So, and of course, here we have a beautiful uptrend. Now I have a failure swing. I am going to sell here. It's a beautiful reversal, and I expect prices to go lower. But sometimes prices will not do that, and that's why I place my protective stop loss here, so I will lose a minimum amount of money. Another question, can you give the advantage of a leverage of 1 to 500 versus 1 to 1,000 or vice versa, in terms of profit or loss or risk? For example, for a 1,000 USD balance. Okay, what is better, 1 to 500 or 1 to 1,000? What do you think, guys? Give me some feedback and I will give you my answer, okay? I'm giving you 1 minute to give me some feedback. Please type your feedback and I will come back to this question, Mr. Or Mrs. I don't know, Naf Emerson Vergara Silva. Okay, very good. So give me some feedback. Take profit. When are we going to take profit? Profit is a very pleasant opportunity for us, very pleasant topic, all right, because we are going to increase our capital. Yes, we smile and we start dreaming again. So where are we going to place our take profit? Well, you have to wait for that because I'm going to talk about the leverage of the last question. So I have two answers here saying that 1 to 500 is the best, and another one saying that all the same for me. Okay, look at that. The higher the leverage, the more the profit you're going to get. Is that correct? More leverage means more profit. At the same time, more leverage is more loss. So it's up to you. What do you want? You want more profit, more loss, or less profit, less loss? This is the question. The answer is yours, guys. Okay? Very good. So where am I going to take my profit? I buy here at the reversal, and then I place my protective stop loss right here. And the market is expected to go higher and higher. And of course, I'm smiling. I start dreaming again of what I want to do with my profit, and then at some point in time, I see a reversal. So this reversal means that this uptrend has finished, and a new trend, a downtrend, has just started. So if I bought here, I'm not allowed to keep my long position after that bottom here. So I have to take all my profit here. Okay? Is it clear? Very good. So in an uptrend, I get a failure swing, I sell, I place my protective stop loss at this point here, and then I expect the market to go lower and lower. Most probably the market will go lower because I have identified the downtrend, right? And this is very pleasant because I make profit, and then I identify a reversal of this downtrend. So this downtrend has finished, so there's no excuse anymore to have a short position. So at this exact point here, right here, right? At this dotted line here, I close my short position. Okay? So I take all that profit. Very good. So what most to consider to say the symbol is bullish or bearish in order to follow a trend? What you have to follow, what you have to consider is the failure swing, nothing else. Failure swing. Okay, so look at that. So you see, this is the 1 minute on Australian dollar Japanese yen. We bought here because there was a beautiful downtrend, and then there was a failure swing here. I bought here. The market is going higher. Yes, I have 2 black candlesticks here. My stop loss is here. So I'm still in the uptrend, and I have to wait and see what's going to happen. In the meantime, I have questions. How to partially close position? Please explain your last slide again, if possible. Okay. My last slide, if possible. Here we are. We have a beautiful uptrend, right? Higher tops and higher bottoms, and then I identify a failure swing right here. So at this point I sell, and of course here I place my protective stop loss. Now I expect prices to go lower and lower, and indeed prices go lower and lower. I smile, I dream what I'm going to do with my money, right? And don't forget you're a poor professor, guys, all right? And of course, here I have another failure swing in the opposite direction, signaling the end of the downtrend. So I have to close my short position right here and take my profit, right? Is that clear? Very good. So this is the last slide. I have another question here. How do I use the trailing stop loss to protect my profits? Based on this strategy, we don't use trailing stop loss. Okay. Of course, there are ways to lock profits, and perhaps I will steal a couple of minutes and give you that information, even though we covered that in the previous, I think it's the previous webinar where I explained in every detail the Fibonacci strategy. We use Fibonacci to take profit as well. So I will do that. I have another question. Many questions, guys. Okay. Andreas, what time frame is best for trend watching? I answered that. Any time frame you like, right? I like 30 minutes and 4 hours. Perhaps for you, it's another time frame. It has to do with your profession, with your free time, with your job, with your lifestyle, with many other things. Which side do you use for fundamental analysis? Very nice question. You can use our site. We have on our Forex Time, we have market research analysis section, and go there. My very nice colleagues will give you very nice reports, informative reports, so you can use their fundamental analysis. Personally, I don't watch fundamental analysis. I'm a certified technical analyst. I don't do that, right? I focus on my price chart, right? Another question, how to partially close position, thank you. It's out of the scope of today's webinar. I'm sorry, Christian Frederick Russ, okay? So, of course, I'm going to be in South Africa for a series of seminars and workshops, and there I'm going to explain, of course, how to close partially. Very good. And I can show that, Christian, in another webinar. But for now, I think it's very important to show you that if, do you see here, let me just simulate it for you so you can understand. So we have an uptrend here. Do you see the uptrend? Do you see this uptrend? It's going higher and higher. And then do you see that this bottom here, do you see this bottom? And then perhaps you can sell here. You sell here, and you place your stop loss at this point here. All right? And prices continue to lower and lower. You make a lot of profit, guys. A lot of profit. Do you see that? And then you get this bottom that doesn't go lower, and then you see this failure string at this point. So now you have to close your short position, and you will take all that profit. So this is a chart, all right? It's not a slide. And of course, perhaps you can find another one. Look at that. Prices go. If you say that this is a downtrend, then you have a failure string here. Do you see this bottom that fails to go lower? You buy at this point here. Prices go up, then they come down. This bottom, you see this bottom here, but this top fails to go higher. At this point here, you are forced. You have to close your long position with a very little profit. And there are so many examples to see on the chart. Another example is here. You have a downtrend here. Do you see the downtrend? And then you have this bottom here. Do you see this bottom? Let me just put the stop loss. Here is your entry. Here is your entry. All right. And here is your stop loss. And prices go higher and higher and higher and higher. And then you come to this point here. You come to this point here where this top fails to go higher. So this is your stop loss if you go short. But here, nevertheless, you have to close your long position and take all that profit. So what I'm trying to say is that you enter with a failure swing and you exit with a failure swing. This is going to give you the maximum profit. But at some times that it's very difficult to happen because it depends on what news are coming out. When news come out, when reports come out, the market gets interrupted for a few minutes, right? And then most probably it will continue its direction. We have a question? No? Time? I don't have time. Can I get some more time, please? Because I have to give my students another way to take their profit. And all right, can we keep trailing stops below previous stops or lows? I don't like the idea. See you in Durban? Oh, of course, I will be there. When and where are you coming to South Africa? I'm coming there for 15th of September. I will be there until the 24th. FXTM MT4 platform, the PIP is 10 times. For example, 40 PIP is 400 points. Yes, this is how it is. Okay, when you talk about PIPs, you can talk about points. 1 pip, this is what you have to remember now. 1 pip is 10 points. This is it, okay? And then you make your arithmetic. 1 pip is 10 points, okay? All right, very good. So let me give you the another way to lock profits, to take profits faster. This way is called, of course, Fibonacci. So you have to make a couple of notes, and because I have to wrap up, guys. My colleagues here are pressing me to close this, to finish this webinar. Okay, so look at that. Here is your Fibonacci tool. So you click here, and then you place at the top of your entry, and you drag it to the bottom of your entry. And you see you have 161, 261, and 423.6. Now, here at these 3 levels, you can start closing part of your position. You can close part of your position here, another part of your position here, and another part of your position here. Okay? This happens in an uptrend. In a downtrend now, I will just mention that you click on the Fibonacci icon, click, and then in a short position, you click the Fibonacci tool at the bottom and you drag it to the top, like in this case, and you have 161.8 level, 261 point, another take profit level, and 423.6, another take profit level. Okay, I go through this technique very fast because we had a webinar last time. The last webinar was on Fibonacci, but I didn't want to leave the whole strategy just like that without mentioning this take profit Fibonacci method or strategy. So I have another question. In uptrend, if highs get higher but lows don't, or do you? Okay, so if we have higher tops but the bottoms are not higher than each other, what do you do? So if you don't have a good picture in front of you, then don't trade it. It's as simple as that. It has to do with your confidence. If the picture that you see in front of you makes you feel good to enter the trade based on the teachings and the training and the strategy, then go ahead. If it doesn't make you feel good, why do you want to risk it? Okay, guys? So I will see some of you in South Africa in mid-September, and of course we are going to have more webinars. I would suggest that before you leave, before we say goodbye, please type here which topics you would be interested to watch as webinars. Give me some feedback, please, so I can give you the webinars that you are interested in. Okay? So before you leave, just take a few seconds, few minutes, and write just a concept, a title of a webinar that you will be interested to watch. Okay? We have so many webinars, but just help me so I can help you. All right, guys? I hope you enjoyed today's training, today's webinar. It was a pleasure answering your questions, and please stay tuned. Watch our emails that we send you. Watch our announcements on my FXTM about our upcoming next webinar. Register on time, and please, before you leave, just type the title of the next webinar that you would like to watch. Okay? Bye-bye from me, guys.